Good afternoon, everybody. Welcome to TraderMerlin Show for your Thursday edition. Sorry for the last 2 days off, but, you know, we've got to do what we got to do in life. And yes, everything went swimmingly. The good news is doctors found absolutely nothing. So happy to see that it all passed peacefully and good, I guess. Thank you, Katie, for taking care of me as well in my incapacitated needs. Anyway, let's get in touch with what happened in our markets. What I want to do today's show is two things. Number one, I'm going to cover what happened in February because I always love to look at the end of the month and see kind of how things performed. And then I also need to correct some mistakes that were made. Not mistakes per se, but clarifications to something we talked about last week. So I'll make sure to get to that. And big shout out to everybody from all over. I see we've got Florida in the house. I've got England in the house, Kansas, and Katut. Are you still in New York, Katut? Or did you go back to Indonesia? Are you living in New York now? I think you are. Anyway, hopefully get you on the West Coast one of these days. Anyway, let me kick things off with the graphic du jour, which is this bad boy here. February market review. Yes, this is AI generated. I asked for a cool looking chart of the markets, and that's what it gave me. Pretty awesome. Oh, thank you. Yeah, the hat, my hair was all messy, and I just wanted to cover that up. That's pretty much the truth of the matter. So let's start with our list of performers for the month, just to see where things ended up, how it went, and ultimately what was the best performer. Let me ask you guys, before we even go into this, what do you think was the best performer? As you know, I typically talk about 7 asset classes. And of course, I've opened this up to discussion to add in more, and we kind of landed on 7 different assets. Number one, we've got, let's say, the Dow. We have the Russell, the NASDAQ, gold, S&P, crude oil, and Bitcoin. Now, some people might want other ones in there. If you do want something else added to our roundup of top 7, great, let me know. Maybe we'll make it top 8. I just don't want to make it the top 50 because then we'll just spend too much time going over those and I don't know, it becomes sort of time consuming. But what do you think was the best performer? We'll start with the best performer and then later on ask a different question. But what do you think was the best performer for the month of February with regards to those top markets that I just read to you? All right. So what do you think? Is it Russell, NASDAQ, Dow, gold, S&P, crude oil, or Bitcoin? Yeah, no, you could say commodities, but then again, that's very vague, right? We're talking copper, wheat, soybeans, metals. So the only commodities I have in there are crude oil and Bitcoin. And yes, I did say Bitcoin because Gensler has said that Bitcoin is a commodity and also gold. So what do I see? Jason says Bitcoin is your best performer. Notice the books don't know. Oh, okay. It's what's interesting is it wasn't like a blowout victory. Out of these top 7 markets, there was actually only one that was positive for the month of February, just to throw that out there. Not the best start. Well, I mean, we had a decent January. But let's look at the numbers here, and I will reveal it as some of those results come through. Glenn says natural gas, but I don't have natural gas on my top 7. So best performer is Premium Decay. Oh, Tom. Broken record, Tom. Yes, you're right. Premium Decay is the best performing asset over time ever. All right, let's go and work our way from the bottom to the top here. Jason was correct, by the way, just so we know. There's Bitcoin at the top. Oh, great. And these are going to be all out of order. This is what happens when you don't have a lot of time to prep for the shows. They come out really messy and clunky. So I will hopefully, I would actually do it the opposite. So we'll start at the top and work our way to the bottom. Fine. I'm okay with that. We'll go backwards. So best performer, Bitcoin, 0.69% for the month. What you'll notice on a lot of these charts here is a lot of choppiness, and especially when you look at the monthly time frame, these and the broader indexes, a lot of chop. And you can see that for the past 4 days, Bitcoin's just been going sideways. But look at the monthly, right? You have this kind of wider range. Now, I put a yellow box down here early on because this was kind of my breakout talk track that I've been looking at in the CIL as well as on this program. You don't really see the box on the monthly, but you do definitely see it on the daily. We could put a bigger box on this Bitcoin price chart here, which really shows prices bouncing between, call it 25,300 and those lows that we saw back around 15,000. So $10,000 range, we might want to shrink that one down just a little bit. But that's what we have for our Bitcoin price chart. Monthly looks like just sideways. However, on the daily, you've had the breakout, and now the question remains, do we drop back down to 21.7 to challenge those most recent lows we saw in mid-February, or does it catch a bid, stop here at 23,000, and start to break new highs and hit 26, 27, 28? I'm hoping for the latter two. Of course, you guys know how I feel about the word hope. All right, that was number one. Number two, taking your silver medal for the month of February, NASDAQ 100 down 0.36%. So if we take a peek at the NASDAQ, and a lot of times I do the indexes, I do them from the ETFs. So I took that from the QQQ, but I'll be looking at the price chart here, the futures. You can definitely tell the monthly time frame here has been somewhat sideways, really going back into October. The good news is it recently tiptoed up in February to a higher high, but then has drifted back down. So we're kind of in this, some have called this a double top formation that we saw in the NASDAQ on the daily. Not quite a top, in my opinion, not quite a double top. But you do have prices pulling back, and I do have this 11,446 line drawn as kind of my potential target if we continue to drift here. Now, this is the daily chart of the NASDAQ. We'll take a quick peek at the monthly since that's what I'm looking at as the reference numbers. And you can see the good news is we have pretty much traversed sideways. Get rid of that little bad boy there. Get rid of him. We're traversing sideways. Now, there is one big story here, and if you guys follow Bob Dunn at all, who is the master of riding the wave, and Bob Dunn will be on this program next Wednesday, we ended the month of February for the NASDAQ with a giant shooting star, right? You can see this really long topping tail on the NASDAQ 100 E-minis, closing right near the bottom of it. Now, the only problem I have with this, and many of you probably know what the answer is, it's not really at the end of an uptrend. It's really in sideways consolidation. So while I love this shooting star by itself, it's awesome, especially on a monthly. It's great. However, it doesn't really, it's not like I'm so excited about this one because I think it's going to have a big move. I don't believe it's going to have a big move simply because it's traversing sideways. We could put a yellow box around this thing just for fun. Let me take off my snap because this box is not going to be drawn in the best spot. But, somewhere around here, you guys can see that, yeah, we did have that topping tail that popped outside the top range here. But, it's not the end of an uptrend. I'd love to see this at the end of an uptrend, but we don't have it. So even though I do see it on this chart, is not that great of a candle formation. Now, where does it look out on the daily? You can see that we still continue that yellow box over, but we had a dozen or so candles that were outside that range, and now we're pulling back into the middle of that sideways range. So that's your NASDAQ, which is down 0.36 for the month. Moving on, still staying with the indexes, Russell, but now the numbers start to drop a little bit more significantly. Russell 2000 was down 1.72%, so I'll bring up your IWM here. This one I actually like better, especially on the daily time frame. I like this better than the NASDAQ because what you're starting to do is you're starting to establish this line at 187 on the Russell 2000 ETF IWM. You're establishing this line at 187 as kind of a line in the sand. And you notice that we have not been able to close below this line yet. Now, I drew this blue line a while back simply because of this low that went back to January 30th of this year. So we've hit it one time, bounced a little bit, hit it twice, actually crossed it, bounced up again, and we opened up down below that today, but didn't close below it. So watch this 187 line for the IWM, a close below that. I think you're seeking out new lows, probably heading down to this 182 mark, which is right about there. Hey, Jimmy. All right, so that was number 3. That really does it for our podium. Normally I work my way from the bottom to the top, but we started from the top to the bottom. And our next one is crude oil. 2.31% slide for the month for CL. Certainly a choppy one, and it has not been able to break out of this box since December, right? December 1st, we kind of peaked the top end of the range. Right about December 6th, actually December 9th, we hit the bottom of the range, and we've been traversing sideways ever since. So anybody, Tom, I know you love these really sideways consolidations. Crude oil is usually a very difficult one to trade because of the volatility, but boy howdy, if you are a range-bound trader, this is probably one of the better charts I've seen from a pure range-bound trade perspective. So right now, crude oil sitting at 77.89 on the day, was only up 0.26%, but for the month down 0.231% on crude oil. And here is your monthly of it. So see what that big picture looks like. And I've had that yellow box on there. It's staying on there, not going to go anywhere. Been really sideways in that range since November of last year. All right, keep moving on. You guys are awfully quiet out there today. I guess I take 2 days off, and this week, 2 days off last week, I lose a lot of viewers. Dang it. All right, crude oil, moving on. S&P 500 down 2.51%. Today, it was up 0.7%, but all in all, on the monthly time frame, it looks to me like this trend may have reversed, right? We had this big peak back in January. I'm not sure what that is there. Let's get rid of that line. And you have this series of lower lows, lower highs, which is certainly a downtrend intact. But then all of a sudden we started to break that, and we broke that actually back in January as it starts to make a new high and making a higher low. So this is kind of an inflection point, in my opinion, for the market, saying, well, which way are we going to go? Have to put on your hat, right? Which hat do you want to put on? The longer term hat, like the really long-term hat, says it's a pullback in the uptrend and we're going to be looking for higher highs from here on out, right? Start making some higher highs. We are seeing intermediate uptrend. If you're looking, longer-term uptrend. If you're looking more intermediate, you still have, overall, it looks like lower highs. Granted, this high that we just achieved in January is slightly higher than the one we saw back in November, but it still looks like the pressure is to the downside, which means that's the decision moment, right? Are we going to break 4,200 on the S&P? In that case, then we'll challenge 43, and then clearly you can see there's some levels at 46 and 48, so that could move up pretty quick. Russell and Dow have kept you happy lately. Good. We like them indexes. I mean, I personally, if I had to take my choice, Tom, and you probably agree, I would much rather be doing your type of trading on an index like the Dow, the S&P, NASDAQ, because of its diversification, other than the crazy volatility that could happen with crude oil and get smoked all of a sudden. So yeah, let's stick with the Russell and the Dow if that's what's making you money. So there's your S&P up 0.71% for the day, but on the weekly, you see maybe a potential change here. On the monthly, it just looks like sideways consolidation for the past 4 months. You see almost the same size candles month after month after month. If history is any teacher, we have a green candle for November, red candle for December, green candle for January, red for February, which means should have a red candle for the month of March. Why? Red, green, red, green, red, green. Stick with the patterns until they break. I know that probably won't happen, but hey, just a thought. Yeah, let's see. Moving on, I got 2 left. Dow Jones Industrial Average taking a drubbing here, down 4.18% for the month of February. Of course, you guys probably all have seen the mistake that I made on my screen over there, because I have it written as the month of January, which is not what it is. We are not in the month of January. I'm going to correct that one right now for you guys. Oh, see, a little bit of anesthetics, and I'm just a mess. Things are all over the place. All right, so that's your true screen. Month of February, not January. 4.18% slide for the Dow, and chart-wise, you look at this one, it still has that similar red-green pattern that we saw just a moment ago on the S&P, but it's definitely looking weaker. Now, we're right at the bottom end of that yellow box. I drew that yellow box on there a while ago. I did not draw it on the monthly. I typically draw those on the daily, but I'll expand out here in just a second so you guys can see it all. When you look at this one, 5 months of pretty sideways action. Let's go to the weekly here. I mean, that's stuck. That is absolutely stuck in that range. And the point we were talking about with Tom the other day, because I think this is one of the ones you're trading, is, if you get a close outside, which technically you could argue that Wednesday's trading, we had that close outside, that would have been a trigger to go potentially short here. You actually had 2, Tuesday and Wednesday, kind of closed outside the low from what we saw back on December 20th. And tiptoed across it and ripped right back up. So that certainly, if I was watching this and trading it, would have whipsawed me. Right, I would have gotten short here and then stopped out, but luckily I was getting medical treatment. Didn't need to worry about trading on those couple of days. All right, that is your Dow Jones Industrial Average. And lastly, good to see you, Pepe. Lastly, we have G to the L to the D. An ugly month for gold, 5.37% slide. Let's go bring up the ETF GLD. It's funny because you have this later at the tail end of last year, we were talking about our bullishness on gold. Really felt confident because that trend looks so strong. Now all of a sudden, I actually expected a pullback to about 170, but we broke that, and now you're just seeing lower lows and lower highs. So the last 2 days have kind of shot us back up into the upper end of this range. Let me draw a yellow box on here. I know, yellow boxes. You're torturing me, Merlin. Here is the yellow box, which outlines the most recent range, right? You can see the high we established on February 17th and the 21st, right at the holiday weekend, popped up on GLD to right around 171.50. We hit that again yesterday. Yesterday's high was 171.49, so 1 penny off of hitting that high. And now it looks like those highs at 171.50 may hold. So kind of curious to see where we go with gold here. I'm still bullish on gold long term, but right now it feels like you're stuck in this little yellow range. If it breaks out above it, may look to be adding some gold to a position that I have. And that is your month of February. Now, the thing I didn't add to this list, and maybe I should incorporate that in, is 2 factors. Number one, what happened to the dollar, because obviously that is one of the major drivers of our markets. And the other one would be what happened with the bond markets. So I'm going to add those ones in here. Tom says, my yellow boxes have fuzzy edges. An iron fly near the lower edge has a break even outside of the yellow box. There you go. You got your rules in place, my friend. So let me just real quickly bring up those two and see what's happened with that dollar index for the month. Now, I'm going to leave this graphic on here, which was our bullish flag formation, which put a target on that dollar index about 106, almost 106.50. Now, we didn't get there on the breakout. We've jumped up to a high of 105.32, which we saw actually just right here above 105.35 on February 27th. So was still looking good. We did have that little bit of chop here and a nice update today for the dollar index up 0.58%. But what does it look like on the monthly, since that's kind of been our discussion here? The monthly looks even better. And I know some of you might disagree, thinking, well, what's define better? Well, you know, we had this really aggressive sell-off and had that line mapped out there at 101, right? 101.20 would look to be about that line. We bottomed out there in January. We broke below it in February briefly, went all the way down to 100, and then ripped up again. And now we're back to potentially an uptrend. So I guess what remains to be seen here with the dollar index is if this is just an impulse and a corrective phase. And you guys know how I feel about impulse and corrective phases. Typically, let me get some of these lines off here because they're driving us crazy. Typically what you get with an impulse is this big move up. A corrective phase is usually a slower move down. In this case, it actually was fairly aggressive. And then we get the next leg up. So one tool that we can use, and I was thinking about doing a special show on this since I know a lot of people have been asking about it. Maybe if you guys want, I'll do one on Fibonacci, is how do we measure this? So what I'm doing is I'm using a Fibonacci extension tool. We'll use Snap. And I'm going to start where this move really began, which is down here on May 3rd of 2021 on the monthly for the dollar. You can see it ripped aggressively all the way to this peak that we saw September 1st, which brings that dollar index up to a high of 114.77. And then it pulled back to the lows we just saw in February, which brings us to a low point of 100. Now from there, you get these extension marks that are put on. These are Fibonacci extensions. Now, the way I like to use them, and this is going to be very different than the way others might use it, is I like the common numbers, which are 38.2. So I'll put a horizontal line there, and I'll put another horizontal line at the 78.6, which is a common one. And we'll also go to the 618. So what I'm doing is basically just saying, where are potential stopping points for that dollar going forward? And what I generally will do is I'll put those lines off, and then I will take away the fibs because I feel like that colored thing that they use in TradingView kind of obscures what I'm looking at. So let me delete that now. And when you take that off, I've got these little horizontal lines, which for all intents and purposes mean nothing, right? They really don't mean much. But if I can coincide those potentially with something in the past, like lo and behold, this one right here, which is the 78.6, is perfectly the dead high to what the dollar experienced back in 2002. Now, you might be thinking, come on, Merlin, really? You're going to use a high from 2002? Yeah, absolutely. I mean, come on, put yourselves in my shoes or put yourselves in your shoes as traders, right? If I look at this chart right here, and this goes all the way back into 2007, if I see the price, and it doesn't matter if this is a dollar, imagine this is any asset class, and this thing starts rallying and showing a lot of strength, and we currently are, up here somewhere, I'm absolutely going to be using these levels. Why? Because it turned in the past, and somebody's going to be looking at this price chart, and that will be where their eyes are drawn to. So absolutely, that 120 on the dollar index becomes a logical target, not only because of the fib extensions, but also because of the historical price action, which adds a second layer of, I guess, comfort for me in making a trade or a target, setting a target on that specific trade. Fib magic. There is something about it, Alan. It's a phenomenon. If you ever walk through the produce department, take a look at your cauliflower, your broccoli, even the way they stack the produce sometimes, it's Fibonacci ratios. Crazy, crazy stuff. And lastly, what happened with the 10-year? Now, obviously, we've seen over the past couple of weeks a lot of chop in that 10-year, but I'll go back to the monthly, right? So if we look at the monthly, and this is kind of a very interesting thing to look at because the rates obviously have been falling. And this goes all the way back into the 1970s. I mean, it's kind of strange data. You really can't see them. I have it all the way back to 1913 apparently. But I don't know how accurate that data is. But if we look at the most recent data, we start having candlesticks. That really goes back into 1979 or 1980. So this chart here is just lower lows, lower highs, down, 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 down. And then this monthly took a huge about face starting in 2020. Of course, large part due to the fact that the Fed and Treasury Department put in about $15 trillion in the economy. So on a monthly time frame, this thing looks great. It looks like it's just higher highs, higher lows, higher highs, higher lows, and just continuing to move to the upside. As we zoom in a little bit here, and I know some people are asking what the yield was. Let me bring up trend line here just so I can show you. The yield increased about 11%, right? It moved up 40 basis points over the month from January to February. So, seeing a little bit of increase in that yield, but I don't think we're done yet. So what does that daily tell us? Right, here's our daily time frame. Cool part about the daily is we have been traversing kind of down a little bit, right? Been making smaller downtrends since those highs we saw back in October, but now all of a sudden we broke the high from January and December, and now it looks like we're back on an uptrend. So my assumption is that top red line you see there at 4.335%, that's going to be the next target for this 10-year. And of course, as this continues to the upside, that means the equity markets should be headed to the south side, which should add more pressure for the month of March. Now, let me add in a screen here, and let's go look at the Fed funds futures, since I haven't looked at this in 4 days, and I love looking at this one. See if things have shifted. Oh, no, we're still right about where we were. You can see we have a 72% chance of there being a 25 basis point increase currently, and a 27% chance of 50 basis point increase at the next meeting. So all in all, it looks like everything has remained about the same over the past week. We're kind of right where we were. Oh, there you go. 24.85% more cash printed. Usually they print 5 to 6. What you talking from 2020? Way more. Why don't you go long the yields? That's a good question, Ambition. I was going to call you peasant, but that just sounds so petty for me to call you peasant. I'll call you Ambition. Why don't I just go long the bond yields? I don't really have an answer to that. I'm not familiar with trading bonds. I like to use bonds more as an indication as to where this market may be headed. So not that I couldn't trade bonds, but I have enough on my plate with all the other things I trade. But I absolutely could. Bond markets aren't going to be as liquid, meaning if I buy bonds, it's not going to be as easy for me to get in and out if I go to Treasury Direct and try to buy and sell these. I would most likely stick to ETFs. Like if I thought that this, here we have let me grab my 10-year again. Where did the 10-year go to? There's the 10-year, right? If I have this 10-year on here, which looks like it's making some higher highs, higher lows, then what I'd want to be looking at if I was going to trade this, since I don't trade the 10-year yield, would be looking at something like TLT. And basically, I'd be looking at going short TLT, which, these are going to be the inverse. Let's see. What products do you trade to go long on yields? The opposite. So if yields are rising, I'm going to have more of a bearish outlook on the market. So right now, I have a bearish outlook on the market simply because that 10-year has been growing and the yield has been getting higher and higher, right? And if it challenges those previous highs, I think you're going to see a big shift in the way that real estate is, well, not a shift in the way of real estate, but a knock to real estate. Because back here where I have my cursor, when we had these 10-year yields up around 4.3, you had a 30-year fixed rate mortgage at 7%. And now the mortgages are back to 6.5 or 6.9%. We could see them back at 7 or 8% if this continues up, which to me starts to choke out the economy, which means go short the market. So Rajesh, I would probably be looking at shorting the equity indexes, or in this case, TLT, right? Looking at shorting TLT. Because as yields rise, you're looking at the price of those bonds, which is what TLT reflects, and that means that prices are going to go down. I'm not buying TLT. I would not be buying TLT, Vinay. The main reason is I believe that the yields are more important. And if these yields increase, and right now I believe the trend, especially starting from February of this year, is up in yields. The Fed has made it pretty clear. They're unwinding their balance sheet, so they're going to have to offer more yield to get rid of the amount of bonds they're trying to sell. Therefore, I think yields are going higher. I actually do agree with Scott McCormick. I forgot where Scott McCormick, I think, had a call on what he thought that 10-year was going to go to, and I thought it was like 5%. But I think you're looking at 5% for the 10-year in the, definitely this year. Probably by mid this year, we'll probably be at 5%. Now, if that happens, you're going to see TLT tank. I mean, it's the exact opposite picture. So TLT will probably back down here around 91, which would be about a 10% slide in TLT. But there's also other bonds that you could get into. But I have no interest in buying TLT. I'd be more interested in shorting TLT because I believe bond yields are going to continue up, which means bond prices will fall. Hopefully that made sense, Vinay. And let's see, our inverted yield curve, our last little piece here. Let's go. This is the 10 and the 1. Most people like the 10 and the 2. So here's your traditional 10-2 yield curve. You're looking at still 0.82% inversion on that. That is still very heavy and the heaviest we've seen for quite some time. And that trend looks like it's going to continue. So, that short end of the yield curve, remember, the short end of the yield curve is being raised because of the Fed funds. And then if the long end rises, we'll start to see this inversion get back up towards this, towards the mean. But that could take some time. Thanks, Rajesh. Yeah, they're upset that I took the time off that I did. They're upset about that. Okay, let me correct something. First off, a shout out to all of you that are regulars here. I know I've been somewhat irregular with doing the show lately. Just got a lot of things going on, but I do appreciate you guys taking the time to watch the program. And for those of you who might be new, hit that subscribe button so you can see when I do come on, which is usually every day, Monday through Friday at 2 p.m. Pacific time. Now, what was the last show we did? Monday. It's either Monday or last week. A question came in from Ed up in San Jose. And Ed, thank you for your research, your feedback. I appreciate it. I did some as well. But Ed asked this question. He said, if a person is concerned that their shares are being borrowed or shorted, wouldn't it be easier to take the account off margin? Then I think shares can't be shorted. And my response was, I'm pretty sure that if the shares are in the hands of the brokerage, they can pretty much do what they want. And I was legally, let's just say legally, I was incorrect. So, hey, Vijay, good to see you. Say hi to Don for me. Legally, I was incorrect because there is a legal statute, which Ed has gone to find out. He went to TD Ameritrade, also went to Interactive Brokers. I actually contacted a friend of mine who's a broker, and I'll give you his response. I will not say the name of his brokerage firm because I don't want to get him in trouble. But here is what Ed got from Interactive Brokers, I believe, or Ameritrade. As a U.S. broker-dealer, Interactive Brokers, LLC is subject to the customer protection and hypothecation rules of the SEC. So the SEC actually puts some rules in place, which we'll explain in just a second. These rules, in particular, 15C3-3 and 8C-1, require the broker to maintain possession and control of all customer fully paid and excess margin securities, i.e., custom margin securities that have a market value in excess of 140%, which that part, I don't quite get that last part there, excess of 140% of the total debit balances, and prohibit the broker from pledging them for a loan, including stock, loan transactions, or otherwise using them in its proprietary business activity. So what they're saying there is those weird rule numbers I mentioned by the SEC is telling this broker that you cannot, if it represents in excess of 140% of total debit balances, you can't borrow those shares and lend them out. You can't lend out customer shares, which honestly I don't believe should be done anyway, but you got to have shorting. To continue on, securities which do not meet these criteria are eligible to be hypothecated for lending purposes by the broker. That is what I was referencing, where the broker could actually go out there and loan out your shares. Now, the last part here is the kind of the important one. Customers can consent to permit securities which are fully paid or classified as excess margin securities to be loaned through participants in Interactive Broker Stop Yield Enhancement Program. Okay, so I believe there's something in your statement when you fill out your account. If you have just a traditional margin account, you're signing this hypothecation, which basically tells the broker, hey, you can borrow my shares. You may not want your shares borrowed, but it's written in your statement. If it's a cash account, apparently they're not able to lend those ones out if it's a cash account. Now, I was incorrect because I said if all those assets are sitting in the broker, they'll borrow what they want and, just make sure they're not going to get screwed, so they'll only do a certain percentage of it. So I thought that was kind of interesting that they're not allowed to do it in specific accounts. The email that Ed sent me before talked about cash accounts. So they can't do it in IRAs, they can't do it in a cash account, they cannot borrow your shares. Now, I talked to a broker friend of mine who's kind of an uppity-up, and I actually read this to him, and he goes, listen, there's a lot of rules that are put in place, and there's some rules that, yes, we follow them, we stick with it, but nobody checks on these things. He also said that you can call up and you can ask that your shares not be loaned out. And he also said, but it doesn't really make a difference, especially because we have so many customers that will just take them from somebody else's account. So I appreciate, Ed, the research. I like when I am corrected for being wrong, especially when I always hope that I'm being correct. So I do love the correction there. They're not allowed to borrow your shares if you tell them they can't. However, let me ask you this. Would you guys know any different if your shares were lent out right now, whether it was a cash account, a margin account, it doesn't matter. I have no clue. I mean, I've got shares at all kinds of different brokers. I have no idea what they're doing with them behind the scenes. And even if I wrote them a letter saying, I do not want any of my shares lent out, I do not want people shorting my shares, do I really trust that institution is going to go, okay, Mr. Rothfeld, we're not going to lend out those shares. Thank you for that email. We appreciate it. Personally, I don't believe that. I believe that they're probably loaning stuff out, and who's going to check? This is not a really that critical of thing. That what they have to do is make sure, and here's the big thing for Ed and others, is again, if I have 1 million shares of Microsoft, and let's say some of those are IRAs, some of that's in cash accounts, which I'm technically not supposed to touch. Well, if I got 1 million shares there, maybe I have 500,000 I can lend out. I'll just make sure that whatever is in those accounts is taken out of that 1 million. So I still have plenty of liquidity there. No, but if I explicitly express I don't want something to happen, I plan to hold them accountable. Right, but you'll never know, Thomasina. You will never, there's no way you're going to log in and call your broker and be like, hey, are my shares being lent out right now? Because you're in an omnibus account. You're pooled. So I don't think that you'd be able to see, might they be flagged? Sure, they might be flagged as, hey, don't short these ones. But again, they'll just look at their bulk of Microsoft shares and say, we've got 1 million shares here. 100,000 of those are in IRAs we can't touch. Great, I've got 900,000 that we can lend out. So, and are they mine? Who knows? It's just somebody's shorting out there. Yeah. So let me finish. So hopefully I clarified that one. So Big Ed, or it's not Big Ed, that's Ed up in San Jose. Thank you for that one. Let me go. This question came in from Rajesh because Silvergate's a crime scene. If you're thinking about buying it, I would highly recommend you don't at this point because they might be going bankrupt. Where was the question so I can read it? Ed, how about put a limit order? Wouldn't that lock them from borrowing? How about put a limit order to sell? Good question, Alan. I don't know that. You would think that would lock up those shares because your limit order is tied to those shares. That might be right. So Rajesh says, what's going on with Silvergate Capital? First off, massive losses, as you can see here. John Garland says $1 billion loss. They're losing money hand over fist, a ton of money. They're also under potential SEC investigation for, I don't want to say fraud, but there was an investigation going on because of their affiliation with FTX and how they were moving assets around when they probably shouldn't have been doing that. So Silvergate, for those who don't know, is pretty much what they call the internet bank. And they have been just getting murdered. I mean, this is like just absolute crime scene since 2021. Since this whole crypto thing started falling apart because of Three Arrows Capital and Luna. You know, they're down. Let's get the exact percentage here, but it is, talk about an ugly slide here for, it goes snap mode, and we'll bring it all the way down to current prices. And it's actually lower than where I'm currently at. So let's just zoom in here. We are down on this bad boy, 97%. So my guess is the reason that they're down here at this price is they're going bankrupt. It's a bank. It's probably going to go bankrupt. They took massive losses. They have big exposure to FTX and a whole bunch of other crypto programs. As was written in here, yes, they were very exposed to a lot of different crypto projects, right? They had a ton of tokens. They were underwriting a lot of these different projects, and they had exposure to the crypto world. Now, depending on who you had exposure to, the severity might be different. But honestly, if you had exposure at all to the crypto world, you got murdered. Here, let's go look at the total market cap for crypto right now, which has gotten a lot better. But let me bring up the total market cap, which is total. You can see we're at $1 trillion. Oh, I guess I was right. We'll be higher by February 10th. I don't when I put that in there. But we were over $3 trillion, right? We peaked at $3 trillion in November of 2021. And now the entire market cap is down, let's see, 63%. Call it 64, just to round and be nice. So you have a pretty ugly slide overall in the crypto market cap. They had exposure to a lot of different tokens, plus their business losses. They were gambling on the tokens that they were buying, doing well, performing well, and vaulting their share price to the moon, which is exactly what FTX was doing, right? FTX was doing some shady stuff behind the scenes as well. So Silvergate probably going under. Would not surprise me in the next week or two to hear a statement from Silvergate saying we are filing for bankruptcy. So don't catch that falling knife. I mean, if you're a straight up gambler, go for it. It was down 57% today. Crazy. But it's down 97% overall. At some point, I know a lot of you are going to ask yourself, well, do I take the chance? Do I take $1,000 and say, I know this money is a risk capital, but just buy Silvergate because maybe they get bailed out? I wouldn't take that chance. I'm not a gambler like that anymore. Some of you might be, but to me, it's just not worth the risk. So, yeah, it was one of the major ones out there today. Something you might feel more comfortable with is something like Tesla, which had a pretty ugly day as well today. It was down almost 6%. We have this kind of sideways action here, seeing just dropping. We do have some unfilled gaps on this. Hell, I might look at selling some 145 puts here. Right now, they had a good Tesla day. Everything went well. Looked great. Fun. Good stuff, man. I like watching that. Yeah, it looks to me like this is going to start to dip down here. And hell, if we get to 145, I'll be a happy buyer. You guys remember back in January, I was talking about how I'd be a very happy buyer at 120 and 100. I had puts on all those, made some great premium, but did not get exercised the shares. So I didn't own it long, which was unfortunate because I wanted to wrap up. Oh, well, hey, Rajesh, again, don't unload because of my opinion about it, right? I think it's more important that you have to figure out what do you think about it. You're talking Silvergate, I'm assuming. It's high risk, right? If under those kinds of losses, you got to ask yourself, how is this a bank going to get back on track? How's a bank going to get back on track? A bank gets back on track because of lending. So they'll go out and they'll start lending again, but they don't have the capital right now to lend because they've lost all their capital. So if a bank makes money by lending and fees, right? Lending and fees, but mainly going to be lending. If they're lending out all the time, they don't have capital to lend, then you don't have a business. And I think that's what's reflected in the share price. So, but that's my opinion. When you are bearish and you sell puts, do you sell puts strictly to enter? No, not strictly to enter. And again, Vinay, this is going to be different depending on the person that you're talking to. I actually don't mind if I get put the shares. So when I'm selling puts, I'll ride it all the way through expiration. Fine. I actually have some puts right now that I sold. I sold some more puts on Boyle about a week or so ago at $4.50. Those are going to expire worthless unless something crazy happens by the 17th. But if I get exercise Boyle at $4.50, I'm fine with that. Most of the time for me, if I'm selling puts, I'm okay being exercised and I carry them all through expiration. If you don't have the capital or don't want to take delivery of those shares, then get out beforehand. But I personally do like to. I'm fine taking delivery, totally fine. Because I usually sell in such a short time frame that the price doesn't get too far away from me, and then as soon as I get exercised the shares, I can start selling covered calls, maybe at the strike price that I was exercised at, and continue to generate more premium and ultimately chip away my dollar cost average to get to the point where I'm now in positive. All right. So let me real quickly go and look at some economic calendar and earnings calendar information stuff for you. Look at Microsoft, good old Mr. Softy, as Mike McMahon mentioned. How many of you guys know Mike McMahon? Boyle's doing great right now. Unfortunately, I got out. I got stopped out of. I followed all my rules, and it's one of those ones you look back and you go, I know I'm going to get grief from people like, oh, you're stupid for getting out. I followed my rules. I cannot be upset with myself. Took a pretty good loss on Boyle, but it is what it is. It's doing great right now. Yeah, huge move. All right, let's look at Mr. Softy. So Microsoft. From a technical perspective, it's starting to look slightly better. Yeah, it's looking great since I got out, Rajesh. Thanks for rubbing that one in. It's up like 40% since I got out. Literally the next day, just ripped up. So I'm not sure where you want to go with this one, Glenn, talking about Microsoft. From a technical perspective, I don't really see anything here that's like screaming at me about Microsoft. I got way too many lines, so let me just do the liberty of getting rid of all these lines because I usually had them on there for a reason, but now I don't need them. So if we look at what's going on with Microsoft, you have the end of this downtrend that started back in November, right? We could put lines across the top here. I know some of you guys like trend lines, so let's just go do this. And to me, it's going to be there. I know I could have tightened it up, but I need to get through that peak. That's 2, third point of confirmation. There's my trend line. So we certainly broken that trend. Now the question is, what's our uptrend look like? And it looks like it's starting to make higher lows, higher lows. The key point is I need to have a turning point for Microsoft here soon. And it does look like you have a small little drop base, just a sell-off into a big rally out that goes back to around 242. So, maybe another $10 lower from current levels is where I would hope this thing turns, but it may have just turned today. And next thing we're going to have to see for Microsoft is get above and start making some higher highs. Now, I'm currently writing some articles, so one of the new things I'm going to start doing is I'll be writing some articles for barchart.com. And one of those, I'm talking about AI. And, I think, as I mentioned before, I think that AI is going to change a lot of the bottom lines for companies over the next year and a half, where they start to get rid of costly employees, not just because of salary, but also time and just issues with employees, and start going more automation, whether that's AI, robotics, and you'll see a lot of these companies start to have better bottom lines because of that. And that may be the next piece that helps Microsoft transition and start to make some new highs. But for right now, if I'm looking at Microsoft, I've got to start making some new highs. It does look positive because we are seeing higher lows, but I don't think we're out of the woods totally yet. Hey, Nestor. Vince McMahon, the old crazy WWF guy, World Wrestling Federation. No, Mike McMahon he's actually one of my really good friends. I've been taught with him for many, many years. I was wondering how many of you guys know him, and maybe I can get him back on the program. Hey, and Vinay, that's the same. If you don't want to put the shares, then close them out and don't take delivery, but I don't mind. I pick a premium price that fits my formula, and I'm happy to take delivery on them. So let's go look at what's happening for tomorrow. I actually changed a whole bunch of these things. Let me remove them all, remove all filters. And I didn't have a chance to cut this out and show just a specific day. So here's what I'll have to go through. We're looking at economic calendar for mañana. Here's what you got cooking. Really, for the U.S., you have ISM Services PMI number. That's your most important piece, and that's going to be happening at, let's see, right now, it's 2:40, so I got 3 hours. So that's going to happen at 4 a.m. That's like way before market opens there. Wow, that doesn't seem right. This is Pacific time. This time schedule always changes on my thing. Let me just click this right here. So I'm on Pacific time. Okay, save settings. All right, let me reload that just so we can see it. Yep, exactly, Pepe. Pro Trader, way longer than the guy. Yeah, he's a good guy. If you guys want, he actually asked if he could come on. I'm like, yeah, sure, I'd love to have you on. I think Mike, he's such a great guy, just a really good person. So I'll see if I can bring him on. I'm going to have a bunch of guests on next week. As I mentioned, we're going to have Corey Lane of Traders Army on. We're going to have Justin Krebs of the Proactive Investor, and we're going to have Bob Dunn on the program as well. So here we go. So it's going to be at 7 a.m., not 4 a.m. Excuse me. My clock was all messed up here at the top. ISM Services PMI numbers coming out. That's 30 minutes into the market session, and that's really all that's there for the U.S. on Friday's session. You can see it's really about services and manufacturing all day. It's starting off in the wee hours of the morning. You've got Spain, Italian, French, German, and then so European Union is pretty much going from midnight till about 1:30 in the morning, 2 a.m., just coming out with services announcements. Plus, you have European PPI number. Remember, our inflation numbers are starting to rise. They're expecting the European ones to be dropping into negative territory, which means a little bit of deflationary pressure there. We'll see if that number actually comes to fruition. And that's pretty much it for tomorrow with regards to your economic calendar. Now, on the earnings side of things, it's been getting a little bit quieter. It's not the main tier stuff, but I will go and show you what happens for Friday, which is always kind of quiet. And here you guys can see through Zacks, nada. Right, there's really nothing here that I would say is of interest. Bluebird Bio, none of these are that exciting to me. Usually what I like to do, in case you guys are using this, I generally will look at the way they sort the data to me, and then I will click on market cap, and that brings up the big heavy hitters and the movers. So for example, today, you had definitely some bigger names. You got Macy's and Broadcom reporting earnings today. Best Buy. Can't believe that Best Buy is still around. It just shocks me. A lot of actually real positive earnings announcements for today. You notice that everybody on this list, Dell, Burlington Stores, Kroger, Nordstrom's, Marvell Technologies, Best Buy, Costco, Broadcom, and Macy's all beat earnings. And with that type of news, I kind of would expect the markets to have a little bit bigger of a rally. It just didn't really, have legs to it. So here, I'll click on market cap, and you can see what it'll do is sometimes it brings in companies that I don't know. Kering, I don't know Kering. Safran, I don't know Safran, or Rocky Bannister Group. These are companies I don't trade, but I generally am looking through here for the bigger names and market capitalizations to see if there might be something moving the market that day. All right, so that does it 45 minutes in. Tomorrow, I'm so ready for a nice glass of whiskey. I was told yesterday I couldn't have anything to drink, so we'll have a glass of whiskey with you guys on our Friday show. I have no real set topic right now, so if you are new, I know I've got some new people here. Vinay and a few others, welcome to the fray. Hit that subscribe button so you know when I do these shows. But tomorrow, generally my Friday show involve a glass of whiskey, sometimes 2 whiskeys, depending on how the day goes. And we'll just talk about our markets. And if there's something that you want me to discuss, something you'd like to cover, some analysis you want to see, let me know. You can put them down below any YouTube video. Just pick up any YouTube on Trader Merlin's channel. Comment down below that, and I will add that to the list for our slides here. And you can also email me at TraderMerlin@gmail.com, and I will get to those and put them in our slide decks and hopefully get those questions. So thank you guys so much. Hope you have a fantastic Friday. Cheers, everyone. I'll see you with a wonderful, maybe I'll go grab a new bottle today just to celebrate. I'll see you guys tomorrow. Take care.